Welcome to the Transparent FX Academy. I'm Nick, and I'm a top author and TradingView with over 190k reputation points.
In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing and how they're shifting their orders. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss.
If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts.
Starting here from the monthly time frame, what we can see is that we have a market which at the moment is testing and rejecting to the upside a quite strong historical and significant structure level. In fact, this area was already acting as previous resistance, starting from here, preceding all these rejections to the downside. Then the market broke above that zone with this impulse, and all that previous resistance was turned support here. The market tested the level as support and is currently still in the process of rejecting it to the upside. So from a monthly standpoint, everything seems quite bullish. The market is rejecting to the upside previous historical monthly resistance turned support, and more bullish price action could be expected. However, it is also important to keep in mind that no market can just go straight up. Every uptrend is created by a series of impulses and corrections in which every time the market is creating new higher highs and also new higher lows. So in a situation like this, there is definitely the possibility of seeing the market create first a correction and then the continuation to the upside, essentially for the market to create first a higher low and only after having creating a higher low, print yet another monthly higher high. We can also notice that if we drop down on the weekly time frame, the market has created quite straightforward price action in the last few weeks. In fact, we can first of all notice how the market was moving inside of the range. This range is very easy to identify. We had the top of the range here previously acting as resistance and the bottom of the range here previously acting as support. Then the market with this green candle broke above the range. So the previous high of the range, which was acting as resistance, after being broken to the upside was turned support. The market tested the level here as previous weekly resistance turned support and is currently still rejecting the level to the upside. So from a weekly standpoint, everything seems quite bullish and we could expect more potential bullish development away from this zone. We can also notice that after breaking out from the range, the market has been following pretty straightforward price action and structure, very easily tied to an ideal uptrend. In fact, in an ideal uptrend, you simply expect the market to continue creating weekly higher highs and higher lows, which is in fact exactly what the market has been doing so far. If we drop down on the daily time frame, what do we see? Now, from a daily standpoint, I did speak about gold just a few days ago. I spoke about it after the market created this overextended W formation and I explained all the reasons for which from here we could expect a potential rejection to the downside, retracing all the way down to the 0.32 of the Fibonacci taken on the impulse leg, which is in fact exactly what the market just did. And by the way, I will link in description that previous analysis so you can go and check it out for more free education. But before we dig deeper into what we have here from a technical perspective, first, let's go and see what we have when it comes to the commitment of traders, so the COT data, so essentially what hedge funds and the big players in the market are doing precisely on gold. Now, what we can see here is that with the last reports, net positions have been massively increased. We went from having a 131.1k net positioning all the way up to 282.5k net positions, showing how institutions have been moving back to the bullish side for gold, therefore making it stronger. And in the long run, that is what has been happening. But in the very short term, net positions have actually been decreased. We can see, in fact, how we went from having 294k all the way down to 282K net positions. So in the very short term, institutions have moved back to the bearish side for gold. And this is quite important because if we keep this in mind and move back to the chart, this means that even though in the long run everything is bullish, there is a possibility in the short term to see some potential bearish price action being developed. Now, by the way, if you still haven't, make sure that you join my free Telegram channel, which you find both on the screen and also linked in the description, so you never miss new updates. Now, back to the analysis. So if from here the market will create this move to the downside, that would make things quite interesting, because if we do get the creation of this M pattern, at that point there is a good probability of seeing a potential rejection to the upside, completing this M pattern at the neckline, so at this previous support, turn resistance. So if the market, we don't know if the market will create this push lower, but if we do get this move to the downside, this M pattern would become quite interesting, because in the long run, institutions are already positioned to the bullish side, and this M pattern would be also testing this quite strong level of previous daily resistance, which at that point would be turned support here. So if we do get the correction to this zone, and institutions start once again to continue to add their longs, at that point, what would I expect? Well, first of all, in the case of an M pattern, which is a pattern that we have seen many times, the market very often goes and tests the neckline of the M pattern, therefore completing the pattern itself. So that could definitely happen again. So if we do get the creation of this M pattern and institutions start longing inside of here, what I would be doing is, as usual, being reactive and not predictive, because that is what trading is. Trading is reactive, not predictive. The monthly, weekly, and daily time frames combined with the COT data, those are the best time frames when it comes to directional perspective. However, when it comes to identifying early shifts in the trend of a market, the best time frames for that are the intraday time frames, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, at that point, I wouldn't be surprised to see a potential rejection to the upside, completing the M pattern at the neckline. That definitely wouldn't surprise me. Now, if you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website, which you find linked in the description. Here, you have the possibility to gain access to the most complete mentorship program ever that I have created. You have the possibility to gain access to all the courses, the trading station software with the Telegram signals integration, one-on-one private mentoring directly with me, the COT data software that you see me use in all these videos. And if you continue to scroll down the website, past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out. The link is in the description, and I will see you in it. If you enjoyed the video, make sure to drop a like. Also, let me know in the comments below any pairs or topics that you would like me to cover in the next videos, and I'll see you in my next breakdown.